slash your mortgage payment. 5 powerful strategies to save big on your mortgage payment. Hey everyone, and welcome back to my channel. This is KG. I'm a realtor in Maryland, DC, and Virginia. Today's topic is all about saving money on your biggest expense. You guessed it, your mortgage payment. So let's face it, your monthly mortgage payment bill can feel like a heavy weight on your shoulders, on your budget. But the good news is there are ways to lighten that load. So in this video, I will be exploring 5 powerful strategies that you can leverage to lower your mortgage payments. And you doing that will free up some much needed cash flow in your budget. So whether you are a seasoned homeowner or a recent buyer, these tactics can make a significant difference in your financial well-being. And we want to have good financial well-being. But first, please don't forget to subscribe to the channel if you are not already a subscriber, and share the channel, like it, drop me a comment. And if you are already a subscriber, I say thank you. Don't forget to like it and drop me a comment or ask me a question. So let's dive right in. 5 ways. Strategy number 1, refinance with a lower interest rate. So the lowdown about refinancing means that you are replacing your existing mortgage with a new one. Ideally, with a lower interest rate. It has to be a lower interest rate. We're trying to reduce the payment, right? This can significantly reduce your monthly payment, immediately free up some money for your other financial goals. So, who should consider this? If you have good credit, very important, interest rates have dropped since you bought your home. Refinancing can be a great option for you right now to reduce your payment. But there are things to remember. There are closing costs associated with refinancing. Remember, you're changing your loan. So you want to factor in those costs when calculating the potential savings over time. And the general rule really is, if you want to refinance, the rate is at least, you want to make sure the rate is at least 1 point lower than your current rate. So if your current rate is 7%, let's just say, for example, your current rate is 7%, you should consider refinancing if the rate you can get right now will be 6%. Anything lower than that, you're not saving money. Second, extend your loan term. So extending your loan term, also known as loan term extension or loan reamortization, will stretch your payments over a longer period. So this will instantly lower your mortgage payments, but it also means you're going to pay more interest overall on the loan. So should you consider this? If you are facing short-term financial strain and you need an immediate relief on your payment, and loan extension can be helpful and a lifesaver. However, it is very important to also weigh in the long-term cost of increased interest that you're going to pay. Who offers it? HUD is offering 40-year mortgage right now for borrower that may be struggling with their mortgage payments. You want to check it out. You want to call if you have HUD, check it out. But things to remember is also to make sure you carefully consider the impact on your long-term financial goals, right? Because when you extend the life of your loan, you're paying more interest overall. Strategy number 3, you want to explore loan modification program. So loan modification program offered by different lenders are offered to struggling homeowners, to help homeowners that are struggling to avoid foreclosure. So these programs, loan modification comes in different forms, can involve lowering your interest rates, which is going to lower your payment, extending your loan term, which can go from what I just said, 30 to 40 years, or even forgiving a portion of your principal balance. So, who should consider this? If you're facing financial hardship and you are at a risk of defaulting on your mortgage, a loan modification will be helpful. May be a viable option. You really do not want to go through foreclosure, but things to remember when you are doing loan modification is almost like you are qualifying for a loan again, because they have qualification criteria for a loan modification. It can be challenging because they're going to ask for all your financial to make sure you actually qualify and you're having financial strength. It is also important, very, very important, to work directly with your lender to explore the possibilities, the different possibilities. Number 4 strategy, challenge your property assessment value. Do it. So, the government sent out assessment letter every 3 years. We just got ours in the DMV area in Maryland. And these assessment value determine what your property value is, and in turn determine your property tax, which in turn affect your mortgage payment. So you can lower your mortgage payment by challenging the assessment value. Listen, that assessment value is going to be for 3 years. You want to challenge it right away. So what you need to do is you want to first to make sure you thoroughly read the assessment letter sent to you, because that letter has information on how to challenge it, dispute that assessment. You want to see what dates you have to file, if you have to do face-to-face or phone conversation to dispute it. How do you dispute your assessment? You want to contact a local realtor to get a list of similar houses that shows that the value is not as high as what the government is claiming it to be, right? The other thing is you can do with your property taxes is to make sure the house is recorded as your primary residence. Very, very important. Research also property tax credits that you may qualify for. These credits are available in your state government website. Check them out. Take advantage of it. Get in to reduce your property taxes and can significantly lower your monthly mortgage payment. Don't just leave it. Strategy number 5, change your insurance company. Home insurance is part of your mortgage payment. And when your premium comes up for renewal, your premium doesn't go down, right? Did your premium go down? My premium never goes down. It always increases. So what are you supposed to do to get a lower premium so that you can get a lower mortgage payment? Shop around for insurance policy. Change your insurance policy. They're counting on you not changing. Listen, consider changing your insurance policy, shop around. And the other thing you can also do is consider increasing your deductible. So remember, your deductible affects what your payments are. So these are just 5 strategies to consider. The best option will depend on your individual financial situation and goals, right? So you want to check it out and consider which one works for you. If you really need a personalized approach, if you're struggling, you want to contact your mortgage lender or a professional to see what your specific options are available and your circumstances, that they can recommend to you the most suitable strategy for you to lower your mortgage payment, especially if you're talking about loan modification, loan amortization, and refinance. So listen, if you have any question, please leave me a question, give me a comment. If you have anything to add to any of the strategies, have you done it before? I have done property assessment many times and insurance. Did you do that? Let me know. So thank you for watching. Don't forget to subscribe to the channel, like the video, share the video. Until next time, keep your mortgage down by following these strategies.